Earnings now. Emami reported a good set of numbers. The net profits were up 30%. The margins saw an improvement this time around despite an increase in ad spends. NH Bhansali, the CEO of Finance and Strategy as well as Business Development of Emami Group, joins in to talk about that. Mr. Bhansali, thanks for joining us on the show. First, if you could just indicate if you see further expansion in margins in the quarters to come on the back of lower raw material prices.
The prices have started easing down. Particularly for the menthol and for a few of the petroleum-led product packaging materials also. So the prices has recently started coming down. So we feel that going forward there would be some margin expansion from the cost also, which has already happened in the last year as well. In 12-13 also our COG has improved by 100 basis points, and we expect some margin improvement in the next year as well.
Mr. Bhansali, good morning. Your sales growth has been quite strong, but there's a little bit of disappointment around the international performance. Could you just line out what you expect to see in terms of sales growth through the course of this calendar year, even broken up between domestic and international contributions?
Last year was a year of correction and consolidation for international market. In fact, we had discontinued few of the brands in the last year, so there was an impact in the last year compared to their previous year. We had discontinued low margin products like Bonita and Amita, and also there was a correction in the distributors' inventory holdings in few of the countries like Russia and Dubai, Middle East, and in Bangladesh. So there was on the primary level there had been a reduction in the sales. But on and all, overall, there was a moderate increase in the revenue. So I feel this in the current year, we will have a good growth or a reasonable growth of around 15%, 15 to 20% on the international business.
Is this CSD problem completely resolved now, Mr. Bhansali? And what could you pencil in terms of sales contribution from there now?
CSD last year has increased by around 10%. Compared to the previous year, and currently the things are all right. Things are moving, and there are orders, and things are getting executed. So I think there would again on CSD front also a reasonable growth can be expected in the year FY 13-14.
Are you planning to take any more price hikes in any of your products on top of the 4% price hike you took last quarter?
Last year we had done price rises, judicious price rises, and in the current and last year even in the January also for few of the summer products. So price rise we would be very judicious and selective in doing the price rises. I think there could be a price rise impact of around 4% or so in the next fiscal, 4-5%.
Okay.
Just to meet the inflation.
Sure. What about volume growth in particular? This time you did 13% volume growth. What are you expecting to see in the next quarter in terms of volume growth, and what are the key categories where you expect to see expansion?
See, all the categories where we are present in, right from Boroplus Antiseptic Cream to Navratna Oil and Fair and Handsome and Zandu Balm and Mentho Plus Balm, and even HCD division where Pancharista, all are growing very good. In fact, the penetration level of all these categories are very low, and we feel that good growth would continue to come in from the existing brands itself, and we will come out with a few of the brand extensions as well. So I feel there will be a good commensurate volume growth as well in the financial year 13-14 as well.
We wish you luck, Mr. Bhansali. Thanks for joining in this quarter round. Emami, which reacted well to its numbers.